Hello, everyone, and welcome to this week's stock market analysis. Wow, we've had some fantastic action this week. We actually had stocks moving. They were volatile and moving up and down. It was actually fun. We could make some good trades this week. So let's talk about this channel we've been in, or we had been in, I should say. We clearly broke through it. This was Tuesday's action here. We violently broke through it. I've been saying this whole time that how we break through this channel when we finally do break it is important, and we broke through it with vengeance. It was a violent down day there on Tuesday, and I expected this little update here. I posted that on my blog, derivativejoe.blogspot.com, during the week, saying I expected this day to kind of be, a little bit of an up day, but I did not expect this next day, so that was a little bit strange, that rally there. I don't think too many people saw that coming. But today, we completely engulfed it. This is Friday, I'm talking here. Completely engulfed it and had this massive down day again. And now we are clearly, comfortably under this channel. And it doesn't look like, unless a miracle happens, we're going to get back in it. So, now that we finally broke through it, though, we can kind of look for some downside to come. Comfortably look for some downside. Or if you're a bull, I would get nervous if I saw this. So, but I want to talk that maybe we may or may not have something like that. We may just consolidate, because it's very unusual. The market doesn't usually do these V's where it goes down and comes right back up, down and up, or up and down. So you shouldn't expect it to go from this parabolic move straight back down. In fact, you wouldn't want it to do that. The market usually consolidates. It usually moves sideways before it either moves higher again or moves lower. And it looks like we may be entering into a consolidation phase, or we may just be straight up crashing, but I would expect a consolidation more than just a big event down. One of the reasons for that is every rally we've had coming up here has been failed. This, the rally here, failure, rally here, failure, the rally the past 2 days, failure. These are not a good sign if you're long. These bulls have been selling, and today, they always try to quantify it. Why is the market going down? Some news must have come out. There was nothing special that came out today that caused this market to roll over. It's purely technical, which is, the horn I've been tooting this whole time. Okay, so another thing I wanted to point out about this market is the put-to-call ratio. Put-to-call ratio is just basically the amount of puts bought versus calls or traded versus calls traded. And it's about 1-to-1 usually on a normal day. One put for every one call. And on this big down day here, this is the reason why I thought this next day would be sort of an update. On this big down day, it was about 1-to-1. It was like a normal day, even though we sold off more than 2%. Nobody was rushing to buy puts. It was just a normal 1-to-1 day. But here today on Friday, it was like 1.3 put to calls. So we're buying more on the declining stocks. We're buying more puts now than we had been. Something to think about. Something to get a little cautious there. And now another thing I want to point out is the VIX. Okay, I've been saying that if we get the VIX over 20, it's a good indication that we could have some more downside ahead. On Tuesday, we smashed through 20. It was up 30% on Tuesday alone, and then we almost completely, erased the whole thing on the next 2 days. We got back under 20, and then this morning on Friday, we were in 18, and then today we are up 20% again on the VIX, and we're back above 20. We're above 22 right now. We'll have to see if it can hold above 20. If it can, then I would get nervous. I would at least be happier with a higher VIX, because when the market has some volatility to it, you can actually make money instead of just watching it rise, and waiting for it to finally come down. Okay, one other thing I wanted to show about the S&P is the overbought conditions that we had, which are now no longer there. We finally have broken overbought. This is stochastics I brought up. You can see we have turned down on the stochastics, and momentum is no longer to the overbought. In fact, we're approaching oversold. If you do the math, it's about 35, 40 points or so more to where we can actually start to worry about getting oversold. But then again, if you look at how much we were overbought, maybe it doesn't really matter that much, because we could very easily stay overbought for a while. That's about right here anyway. These 30 more points, and that's a big support level we're going to be worried about, although it didn't fare that much as resistance on the way up. The market just kind of laughed at it as it blew right through it. But, you know, that's just me complaining. Okay, let's bring up the RSI now to show you the same kind of deal. Pretty much the same thing. You can see this is our old trend line. We had the divergence, and you can see we have now turned lower. And I'll draw another trend line on there. You can see from here to here. And this will serve as resistance on the way up. If the market does turn up, it could break that. That's not that big of a resistance. Okay, so let's remove that. And then let's go back to our mouse. Okay. Now I wanted to point out the bonds real quick, and we'll come back to the S&P in a minute. The bonds today was a sort of a flight to quality thing. We were up pretty huge today on the bonds. Something we, even though, you know, if you ask me, I don't really think that's a flight to quality, but that's what investors think, so we just have to do what they think. I don't know why you'd jump to buy U.S. bonds, but it's another day. We'll talk about that. Okay, and gold was up today. Gold actually hit a new high today, and I was in gold, and I nervously got out of it. I was kind of kicking myself in the butt for it. Yeah, that's probably better. That's better. Yeah, it was up, hit the new highs today, 80 something, 82. So that's another flight to quality type deal. Let's talk about earnings are over now. We're gonna not talk about earnings anymore. I think maybe next week we'll have a couple, but nothing really important. So anything that's going to make this market move, it's going to have to be economic news or, you know, technical moves, of course. But now I brought up the Russell 2000 here, and the Russell 2000 got literally spanked today. it has been the beneficiary of this move more than any other indice. And you can see it's kind of faded, but you can see we were down 2.87%, and we were only down about 1.4% on the Dow. That's huge. That's almost double. I think it's more than double actually. So I'm going to draw a channel in here too. This is important because we hadn't broken this channel yet until today, and we finally broke it and closed below it. So definitely get worried there. Now let's go back to the S&P. I want to show something pretty neat here. These are the pivot points. These are the weekly pivot points. I use these sometimes, but you got to line them up with all the rest of your indicators because you can't just go by pivot points. A lot of traders use pivot points though, a lot of the pros, so have a look at pivot points for sure. These are the weekly ones. If you don't know what they are, I don't have time to explain exactly what pivot points are, but you can see exactly as we've been rising that we've been hitting higher highs this whole way through. We finally turned it over. I'm going to zoom in a little bit. This is kind of sloppy looking. Okay, you can see we finally turned it over, and now we're looking down on the next week's pivots. We're no longer trending up. We're looking down, and you can see just how well these lines form as resistance. And when they break through them, they break through them and never look back. But when they are on them, they're pretty good support and resistance levels. I mean, have a look at that one there, in the bottom top of that one, just all the way through. So if we get above this red one, I wouldn't be looking to buy, but I'd be pretty nervous if we approach this red one. I may be interested in selling, but I wouldn't get too excited about buying above that level. It's kind of a big deal. So that's the market analysis for this week. I don't think I missed anything. I think the risk reward is still to the downside. We may consolidate, but I want to talk about my blog real quick. It's derivativejoe.blogspot.com. I don't make a dime on it. It's just there for me to talk about my trades for the week. You know, maybe get you interested in checking it out. It's nothing too crazy. I mean, I have ads on there, but they're just for operating expense for the blog itself. But that's that. If you enjoy the analysis, please leave some comments. If you don't, leave some comments too. Thank you very much, and have a good trading week. Bye-bye.